Hello, my name is Michael Lee from StockPicks Made Easy, and in this short video we're going to look at, will the stock market crash? Are we looking at another 2007 or 2000 or even a 1994 outcome? So let's look at the facts and look at the historical trends to give us an indication of where this market might be heading. Looking at this chart, it's a technical chart, so for those that are new to the stock market, this is the behavior and momentum of the market. This is the top 500 shares in the US stock market, and it gives you an indication of trends, flows, where the market momentum is heading. So down the bottom, this is called support, or I like to refer to as also a floor, the foundation of where the prices could move higher or lower. So if we have a look right now, there's another technical term used here where they have moving averages indicating momentum could be shifting to the downside. Right, so right now this pink area here is highlighting that was previous level of support or the floor. Then it's dropped down trying to take out the previous low that we seen in the start of the year. But overall the market is only down about 2%. So let's have a look at a similar chart of comparing it between 2007, which we know was the last financial crisis. Are we heading into another stock market crash? So in 2007 we're using a similar chart to see the same, very similar pattern. Right? We've just seen this crossover, which is a moving averages called the death cross, right? But it hasn't quite gone below the previous floor, right? Or the support. So putting the two charts together, let's compare how they look. Right? This is a scenario where it has actually crossed over with the death cross or the moving averages, changing direction of momentum, getting very close or breaking below that previous level of support, right? You then go over here, you can see the similar kind of layout for 2018, but we haven't taken out this previous support or floor. The momentum is very similar. We've got these are a MACD, which is moving averages divergence, right? It's confirming that it could be going lower, and there's a shift in momentum. But it's not confirmed yet because it hasn't taken out the floor. Now let's look close again. What was the scenario after it took out the support? This is looking to 2008 going through. So there's where we were at the time before it took out the floor or the support, dropped down heavily during the month of January in 2008, then went sideways trying to go higher, hit back up these moving averages and then continued lower. And by the end of the year, it had dropped. You can see it again, once it took out that support, the floor, look at it continue to go lower. Right? It never went above, really stayed above this moving average of the 50-day moving average. Momentum had moved into the downside, and this was pretty close to the bottom before we seen a recovery in March 2009. But it dropped over about 45% during that time once it was confirmed with the technicals and the momentum where the floor was taken out. Think of your foundation. Once your foundation's broke or broken down, that's when the house would collapse, right? If you don't have a solid foundation, things fall apart. And that's what we've got right now. We're right at the foundation of the stock market price. So let's have a look at another scenario, right? We've got 1994 and 2018, which is a very similar pattern. You can see we've got, here's the level of support back in earlier in the year. Here's a level of support early in the year 2018. We haven't quite got this crossover or the death cross, but we are seeing a very similar pattern where we've got the floor being tested, the support is being hitting, or the foundation is being tested right now, what is considered a fair value in the stock market by the large institutions. At the end of the day, the institutions control this market, not the individual investors. So we've got to go with what they're telling us, right? So right now, they're telling us something. They're saying, okay, we're getting close to this foundation where it could break, and we could see a move to the downside. So they're being conservative, and we'll have a look at what they've done over the last week. So let's have a look what happened then in 1994 going up to 1995. We had a reverse, right? The market hit that floor. It hit the level of support. We had the crossover of these moving averages, which is called a golden cross, and then we continued to climb all the way up until 2000. Right? We did have a pullback in 1998, but overall the market rallied and continued to go much, much higher. Right? It went up 51% in 1 year. We've only seen a 2 to 4% drop this year so far, but we could see a recovery up until the end of the year. Depends on what the Federal Reserve is going to announce or what the government policies might bring into play. So let's talk about the Fed. Right? The Fed's about to embark on a tricky balancing act with a rate hike and a dovish message. Right? This was published on Market Watch on the 14th, on Friday. So just recently, last week. And that after 2 years, the Fed may signal the end to its once a week or once a quarter rate hike. This is an announcement which has got the Fed interest rates announcements, which is going to happen on this Wednesday, December 19. And what they're anticipating, they still are anticipating a 0.25% increase. Right? So 0.25 increase on the interest rates. So from 2.25 to 2.5. So what we're seeing, you can see this steady climb over the last 2 years. If this becomes neutral and we don't see any moves in 2019, that may be very positive for the market because they've already factored in higher interest rates. But what we also had seen, which is potentially another clue, is we've seen a record high withdrawal of the stock market. So we had a record $46 billion pulled from the US-based stock funds in a week, according to Lipper. This is the largest or the biggest move out of the stock market on record since 1992. Now, they could be taken two ways. One, it could be that they're cashing up for an advance, or they're taking the money out concerned that this floor or support is going to be broken in the coming weeks. So it's yet to be determined. It's not confirmed on the technicals. The floor is still intact. The foundation's still there. So we see a recovery. We could see this move up 5 to 10% before the end of the year. But yet it's not confirmed. So we're cautious right now because we're on a knife edge of going either way. The foundation is rocky, but it could also be solid enough to just hold these levels. So where are we going to go from here, right? Where now from here? We don't have a crystal ball, but what we do have is historical data and price patterns showing what the institutions are supporting. They're giving us a clues to what could be happening. So right now, with all of this talk about negative talk in the stock market, we're seeing just a slight red bar, right? Nothing like we saw in 2008 where we seen a big crash. Nothing like we saw in 2000 when the market started to fall. We're seeing just a minor pullback at the moment, but everyone's talking about because we went high, we're up about probably 5 to 10%. Those gains have just been pulled back to where it's a flat year. So we're yet to determine whether we're going to go higher or lower, but we've just got to look at the facts. In the previous chart where this could be the high and the algorithms and the cycles of the market, it's showing us that we could have see that late rally at the end of the year, pulling back and then moving lower for the rest of the year. Now this is also could be an inverse or to what could be happening because we've got the trade war. Right, the trade war could be a positive outcome with China and the US, a possible play that Donald Trump does from his business, where he gives them bad news, punishes them, tries to get the lower prices, and then he's the savior. Right, so he may be doing this because he could see the flows of the market. I don't know, it's yet to be determined. But we've just got to keep an open mind and be patient to what is possible. As long as this foundation is held, we have a possibility of prices moving much higher in 2019. So thanks for watching the video. So if you liked the video or want to find out more, you're welcome to access our membership right now or send us an email for a trial. The email address is info@stockpicksmadeeasy.net, or you can jump on the website www.stockpicksmadeeasy.net. So to your wealth, health and success. And if you like the video, please click below and say like and subscribe. Thanks for watching and have a great day.